This is The Bottom Line. The Bottom Line on 938 Live.
Now, the Urban Redevelopment Authority, or URA, has just released its flash estimates for third quarter property data. Joining us now is Ku Swee Yong. He is CEO of Century 21 Singapore. Good morning, Swee Yong. Now, first of all, prices of new private homes in Q3 continue to fall for a fourth consecutive quarter, but we note at a smaller pace compared with the previous quarter. To what extent do you think we might see the drop in home prices bottoming out soon?
I don't think it will bottom out anytime soon. Vacancy rates are continuing to rise and renting out apartments becoming tougher. So that contributes to a higher number of mortgagee sales that we have seen recently.
Some are asking if it's time for the government to tweak or at least remove some of the property cooling measures. What do you think?
This is a very, very small drop. In fact, it is a smaller drop than I expected. So with such a small gradual decline, in fact, it is going to make the property market more healthy. So I don't think the government will lift its cooling measures until we see a sharp drop of at least 5% a quarter.
Only under those circumstances. Now, private home prices of homes in all markets declined, with the core central region leading the way. Can you explain the factors behind this?
I think that developers are now more reasonable when they launch their new properties for sale. So they are launching at the market or with a slight discount to the market. They're not trying to set new record high prices anymore. And for the leftover stock, I think they are also willing to be more negotiable on the pricing. On the resale market, sellers are also more willing to negotiate on their sales prices. So core central region, where the quantum of each apartment is a little bit larger, I think that has taken the biggest hit.
Let's look at landed properties. Prices of these homes fell by 1.7%. What's your assessment of this?
Yes, for this quarter, landed properties fell by the largest margin. Here, TDSR, the total debt service ratio, is the main reason. Most buyers of landed properties of above $3 million, say a semi-D that is $5 to $8 million. Given the age profile of these buyers, they are limited in the total debt service ratio in terms of their borrowing capacity. The people who are a bit more senior in age, say 55 years old, trying to upgrade into a bigger landed home. So that has got the biggest impact.
Thanks very much, Swee Yong. Ku Swee Yong, CEO of Century 21 Singapore. Thanks for joining us on The Bottom Line, brought to you by Turkish Airlines, Europe's best airline.